Okay, some mixed messages on the consumer here. So what does that mean for an investor? What does it mean for the market? We want to bring in Tom Lydon, ETF Trends editor, and Ronald Sloan, CIO of Invesco's core equity team. Guys, you're both sounding a little bearish. Tom, I know you've been a bear. Ron, you're becoming a bear. What is getting you to shift your sentiment right now?
Well, we've spent the first half of the year with analysts chasing the market by increasing their earnings estimates. And I think in the second half of the year, we're going to see just the reverse of that. I think we've gotten ahead of ourselves with earnings. I think the second half is going to be very tough.
And why is that? Do you think it's coming down to the consumer here?
I'm sorry?
Do you think it's coming down to the consumer? We've been talking about retail sales. They weren't that great for the month of May, although consumer confidence is improving. Do you think that the consumer is really at the crux of this, that in fact we're not going to see an improvement in earnings because people aren't buying?
I think it's a game of bluff by everybody. Companies are waiting for the consumer's waiting to be hired. So we're in this stalemate here, and that's why I think we're going to have this much slower period in the second half of the year than people are expecting right now.
All right, well, I think slower.
So I think estimates have to come down.
I think slower in the second half is a sensible view, Tom, but I want to get your view, and I just want to ask you, I was bashing the retail sales report a moment ago because I think it was a bashable report. But there is a front page story in the Wall Street Journal that corporations are very, very, very cash rich. Now, that usually is a fundamental plus. How do you see it?
Yeah, I think you're right, Larry, for sure. But as Trish said at the beginning of the hour, does consumer sentiment translate into retail sales? And today, with the numbers that were out, the answer is no. We continue to be bearish, and I was actually surprised. I caught your show last night, Larry. You've changed. You've donned your.
We were just talking about that, Tom.
I have.
You've donned your glasses.
No, I've eased into it the last few weeks. I appreciate you noticing, because I think with this volatility and all of these problems out there, okay, we got oil spill in the Gulf. Europe is not solved, okay? Right. There's been a tightening of financial market pressures. We're not seeing the kind of jobless claims that would suggest a really great employment. So my thought is, it's a thought, that if you get relief rallies, Tom, and I'm going to ask you this question, do you agree or disagree? If you get relief rallies, would this be a good time to sell into them and take the capital gains of the past 15 months at a lower tax rate, because all those taxes are going up next year?
I think you're absolutely right. You're absolutely right, Larry. What you're saying is what the average investor's feeling today. And again, being a technician, major market indicators have gone below their 200-day averages for the first time in over a year. So use that as a selling point. Keep your cash on the sidelines. Keep it dry. There will be some opportunities down the road. We're not really sure when that's going to happen, but economic news just isn't that great right now.
Okay, so Tom, is there any way, I mean, other than just, say, staying in cash, is there any way to actually make some money here? Because, you know, I don't want to be in cash forever. I mean,
sure.
What are the opportunities?
Yeah, absolutely, Trish. I think, number one, the dollar's going to continue to appreciate. There's the power shares, ETF, UUP. Also, gold continues to look favorable, and I would buy the miners, GDX, which is the market vector miners, as opposed to gold itself, because it only takes $250 to get an ounce of gold out of the ground, and the profitability is just huge at this point. So here, pick your spots, and there's certain asset classes and sectors that will continue to trend in the right direction.
Ronald, what do you think of the gold trade? What do you make of the gold trade? You have any sympathy with that? It's an interesting trade. It's a safety trade. How are you on that?
Well, I don't know too much about the gold stocks. We don't have any gold investments in our funds. But I am sympathetic to the defensive trade. And if I can substitute high quality, low expectation companies for gold, that's where I think we want to
Such as your favorite high-quality companies.
I think let's talk about a Nokia or a Kroger or a CVS, good, solid businesses where, for some short-term reason, we think the stocks have really underperformed.
Tom, are we going into
expectations are low.
Are we going into a double dip? Are you
I don't know.
for that?
I don't know. I think we're just going to be flat and choppy through the summer. The key will be in 3 weeks we start to see earnings numbers again. The question is, have they plateaued, or are they going to continue to beat expectations? I think we're probably topped out through the summer.
All right.
All right, thanks, guys.